Buffett Partnership Limited, 810 Kiewit Plaza, Omaha, 31, Nebraska. July 9, 1965. Warren E. Buffett, General Partner, William Scott, John M. Harding. First half performance. During the first half of 1965, the Dow Jones Industrial Average, hereinafter called the Dow, declined from 874.13 to 868.03. This minor change was accomplished in a decidedly non-Euclidean manner. The Dow instead took the scenic route, reaching a high of 939.62 on May 14th. Adding back dividends on the Dow of 13.49 gives an overall gain through ownership of the Dow for the first half of 7.39 or 0.8%. We had one of our better periods with an overall gain before allocation to the general partner of 10.4% or a 9.6 percentage point advantage over the Dow. To bring the record up to date, the following summarizes the year-by-year performance of the Dow, the performance of the partnership before allocation to the general partner, and the limited partner's results. Year 1957, negative 8.4% overall results from Dow, 10.4% partnership results, 9.3% limited partners results. Year 1958, 38.5% overall results from Dow, 40.9% partnership results, 32.2% limited partners results. Year 1959, 20% overall results from Dow, 25.9% partnership results, 20.9% limited partners results. Year 1960, negative 6.2% overall results from Dow, 22.8% partnership results, 18.6% limited partners results. Year 1961, 22.4% overall results from Dow, 45.9% partnership results, 35.9% limited partners results. Year 1962, negative 7.6% overall results from Dow, 13.9% partnership results, 11.9% limited partners results. Year 1963, 20.6% overall results from Dow, 38.7% partnership results, 30.5% limited partners results. Year 1964, 18.7% overall results from Dow, 27.8% partnership results, 22.3% limited partners results. First half of 1965, 0.8% overall results from Dow, 10.4% partnership results, 9.3% limited partners results. Cumulative results: 133.2% overall results from Dow, 682.4% partnership results, 449.7% limited partners results. Annual compounded rate: 10.5% overall results from Dow, 27.4% partnership results, 22.2% limited partners results. For the overall results from Dow, these are based on yearly changes in the value of the Dow plus dividends that would have been received through ownership of the Dow during that year. The table includes all complete years of partnership activity. For the partnership results for 1957 to 61 consists of combined results of all predecessor limited partnerships operating throughout the entire year after all expenses but before distributions to partners or allocations to the general partner. For the limited partnership results for 1957 to 61, these are computed on the basis of the preceding column of partnership results, allowing for allocation to the general partner based upon the present partnership agreement, but before monthly withdrawals by limited partners. Our constant admonitions have been, 1. That short-term results, less than 3 years, have little meaning, particularly in reference to an investment operation such as ours that may devote to a portion of resources to control situations, and 2. that our results relative to the Dow and other common stock form of media usually will be better in declining markets and may well have a difficult time just matching such media in very strong markets. With the latter point in mind, it might be imagined that we struggled during the first 4 months of the half to stay even with the Dow and then opened up our margin as it declined in May and June. Just the opposite occurred. We actually achieved a wide margin during the upswings and then fell at a rate fully equal to the Dow during the market decline. I don't mention this because I am proud of such performance. On the contrary, I would prefer it if we had achieved our gain in the hypothesized manner. Rather, I mention it for two reasons. One, you are always entitled to know when I am wrong as well as right. And two, it demonstrates that although we deal with probabilities and expectations, the actual results can deviate substantially from such expectations, particularly on a short-term basis. As mentioned in the most recent annual letter, our long-term goal is to achieve a 10 percentage point per annum advantage over the Dow. Our advantage of 9.6 points achieved during the first 6 months must be regarded as substantially above average. The fortitude demonstrated by our partners in tolerating such favorable variations is commendable. We shall most certainly encounter periods when the variations are in the other direction. During the first half, a series of purchases resulted in the acquisition of a controlling interest in one of the situations described in the General Private Owners section of the last annual letter. When such a controlling interest is acquired, the assets and earning power of the business become the immediate predominant factors in value. When a small minority interest in a company is held, earning power and assets are, of course, very important, but they represent an indirect influence on value which, in the short run, may or may not dominate the factors bearing on supply and demand, which result in price. When a controlling interest is held, we own a business rather than a stock, and a business valuation is appropriate. We have carried our controlling position at a conservative valuation at mid-year and will reevaluate it in terms of assets and earning power at year-end. The annual letter issued in January 1966 will carry a full story on this current control situation. At this time, it is enough to say that we are delighted with both the acquisition cost and the business operation, and even happier about the people we have managing the business. Investment companies. We regularly compare our results with the two largest open-end investment companies, mutual funds that follow a policy of being typically 95 to 100% invested in common stocks, and the two largest diversified closed-end investment companies. These were companies Massachusetts Investors Trust, Investors Stock Fund, Tricontinental Corporation, and Lehman Corporation, manage over $4 billion and are probably typical of most of the $30 billion investment company industry. Their results are shown in the following table. My opinion is that this performance roughly parallels that of the overwhelming majority of other investment advisory organizations which handle, in aggregate, vastly greater sums. Year 1957, negative 11.4% Massachusetts Investors Trust, negative 12.4% Investors Stock, negative 11.4% Lehman, negative 2.4% Tricontinental, negative 8.4% Dow, 9.3% Limited Partners. Year 1958, 42.7% Massachusetts Investors Trust, 47.5% Investor Stock, 40.8% Lehman, 33.2% Tricontinental, 38.5% Dow, 32.2% Limited Partners. Year 1959, 9% Massachusetts Investors Trust, 10.3% Investor Stock, 8.1% Lehman, 8.4% Tricontinental, 20% Dow, 20.9% Limited Partners. Year 1960, negative 1% Massachusetts Investors Trust, negative 0.6% investor stock, 2.5 Lehman, 2.8 Tricontinental, negative 6.2 Dow, 18.6 limited partners. Year 1961, 25.6 Massachusetts Investors Trust, 24.9 Investor Stock, 23.6 Lehman, 22.5 Tricontinental, 22.4 Dow, 35.9 limited partners. Year 1962, negative 9.8 Massachusetts Investors Trust, negative 13.4 Investor Stock, negative 14.4 Lehman, negative 10 Tricontinental, negative 7.6 Dow, 11.9 limited partners. Year 1963, 20 Massachusetts Investors Trust, 16.5 Investor Stock, 23.7 Lehman, 18.7 Tricontinental, 20.6 Dow, 30.5 limited partners. 1964, 15.9 Massachusetts Investors Trust, 14.3 Investor Stock, 14 Lehman, 13.6 Tricontinental, 18.7 Dow, 22.3 limited partners. First half of 1965, 0 for Massachusetts Investors Trust, negative 0.6 Investor Stock, 2.7 Lehman, 0 for Tricontinental, 0.8 Dow, 9.3 limited partners. Cumulative results: 114.9 Massachusetts Investors Trust, 102.8 Investor Stock, 111.7 Lehman, 115.4 Tricontinental, 133.2 Dow, 449.7 limited partners. Annual compounded rate: 9.4 Massachusetts Investors Trust, 8.7 Investor Stock, 9.2 Lehman, 9.5 Tricontinental, 10.5 Dow, 22.2 limited partners. For Massachusetts Investors Trust and Investor Stock, these are compounded from changes in asset value plus any distributions to holders of record during year. And for Lehman and Tricontinental, these are from 1965 Moody's Bank and Finance Manual for 1957 to 64, estimated for first half of 1965. Last year I mentioned that the performance of these companies in some ways resembled the activity of a duck sitting on a pond. When the water, the market, rises, the duck rises. When it falls, back goes the duck. The water level was virtually unchanged during the first half of 1965. The ducks, as you can see from the table, are still sitting on the pond. As I mentioned earlier in the letter, the ebb of the tide in May and June also substantially affected us. Nevertheless, the fact we had flapped our wings a few times in the preceding 4 months enabled us to gain a little altitude on the rest of the flock. Utilizing a somewhat more restrained lexicon, James H. Lowry, director of the University of Chicago's Center for Research and Security Prices, was quoted in the May 25, 1965 Wall Street Journal as saying, "There is no evidence that mutual funds select stocks better than by the random method." Of course, the beauty of the American economic scene has been that random results have been pretty darn good results. Water level has been rising. In our opinion, the probabilities are that over a long period of time it will continue to rise, though certainly not without important interruptions. It will be our policy, however, to endeavor to swim strongly with or against the tide. If our performance declines to a level you can achieve by floating on your back, we will turn in our suits. Advance payments and advance withdrawals. We accept advance payments from partners and prospective partners at 6% interest from date of receipt until the end of the year. While there is no obligation to convert such advance payments to a partnership interest at the end of the year, this should be the intent at the time it is paid to us. Similarly, we allow partners to withdraw up to 20% of their partnership account prior to year-end and charge them 6% from date of withdrawal until year-end, when it is charged against their capital account. Again, it is not intended that partners use us like a bank, but that they use the withdrawal right for a truly unexpected need for funds. Predictable needs for funds such as quarterly federal tax payments should be handled by a beginning of the year reduction in capital rather than through advance withdrawal from BPL during the year. The withdrawal privilege is to provide for the unanticipated. The willingness to borrow through advance payments and lend through advance withdrawals at the same 6% rate may sound downright un-Buffett-like. You can be sure it doesn't start my adrenaline flowing. Certainly, such a no-spread arbitrage is devoid of the commercial overtones an observer might impute to the preponderance of our transactions. Nevertheless, we think it makes sense and is in the best interest of all partners. The partner who has a large investment in indirect ownership of a group of liquid assets should have some liquidity present in his partnership interest other than at year-end. As a practical matter, we are reasonably certain that advance withdrawals will be far more than covered by advance payments. For example, on June 30, 1965, we had a $98,851 of advance withdrawals and $652,931 of advance payments. Why then the willingness to pay 6% for the net advance payments over the advance withdrawals when we can borrow from commercial banks at substantially lower rates? The answer is that we expect on a long-term basis to earn better than 6%. The general partner's allocation is zero unless we do, although it is largely a matter of chance whether we achieve the 6% figure in any short period. Moreover, I can adopt a different attitude regarding the investment of money that can be expected to soon be a part of our equity capital than I can on short-term borrowed money. The advance payments have the added advantage to us of spreading the investment of new money over the year, rather than having it hit us all at once in January. On the other hand, 6% is more than can be obtained in short-term dollar secure investments by our partners, so I consider it mutually profitable. Miscellaneous. The bold expansion program to 909 square feet described in the annual letter was carried off without a hitch. The Pepsis never even got warm. John Harding joined us in April and is continuing the record whereby all the actions in the personal field have been winning ones. As in the past years, we will have a letter about November 1st to partners and those who have indicated an interest to me by that time in becoming partners, with a commitment letter for 1966, estimate of the 1965 tax situation, etc. Cordially, Warren E. Buffett.